As we get ready to wrap up 2023, the market has continued to shift in favor of buyers. So what dynamics are at play right now, and what can we expect as we head into 2024? I'm Adina Dragasanu with Adina, YVR Vancouver Real Estate Group, and OAKWYN Realty here with your December 2023 market update. Let's jump right into the numbers and take a look at what's happening. Let's start off looking at sales. In the month of November, we had just over 1,700 home sales. This is down about 17% relative to October, but it's up about 5% relative to last year, and it's 33% below the 10-year long-term average for the month of November. Looking at this by property type, we see that for detached homes, there was 523 sales. This is a 7% increase relative to November last year. For attached townhomes and duplexes, the total was 316, and this is up 12.5% relative to November last year. For apartment condos, there was 850 sales in the month of November, and this is up about 0.5% relative to November last year. On the supply side, sellers have been a little bit more reluctant to list on the market as well. We see that there was 3,369 homes newly listed for sale on the MLS in the month of November. This is down 38% relative to October, and it's up about 10% relative to last year. Compared to the 10-year long-term average for the month of November, this is down just 3%. We currently have just shy of 11,000 homes listed for sale on the MLS. This is down 6% relative to October, and it's up 13.5% relative to this time last year. Relative to the 10-year long-term average for the month of November, this is up about 3.7%. So what does this mean for prices? Well, if you recall, our leading indicator showing us if prices are on their way up or down is our sales to active listings ratio. And simply, we're looking at the number of sales in a given month divided by the total active listings left over at the end of that month. Analysts have shown that when this ratio is below 12% for a sustained period of time, prices are typically on their way down and we're in a buyer's market. And when this ratio is above 20% for a sustained period of time, we're typically in seller's market conditions and prices are on their way up. Between 12 to 20%, we're in balanced market territory and prices usually stabilized. For the month of November, our sales to active listings ratio was 16.3%. So we're currently in balanced market territory. If we look at this compared to last month, we see that it's down about 1.6% when the ratio is at 17.9%. And relative to this time last year, the ratio is down just 1.3%. This time last year, we were at 17.6%. Looking at this by property type, we see that the ratio was 12.7% for detached homes, so just on the cusp of buyer's market territory. For attached townhomes and duplexes, it was 19.8%, so right on the cusp of seller's market territories. And for apartment condos, it's 18.2%. And this almost feels like a deja vu from this time last year. As I mentioned, the ratio is just down 1.3% relative to this time last year. And what we're seeing is the same trend, with prices starting to flatten out and challenges bringing buyers and sellers together. Many buyers in this market think that the market will continue coming down, so they want a steep discount, whereas sellers are still valuing the properties based on peak pricing in the spring. So it's really challenging to bring the two together at prices that are agreeable to both sides. So how is this impacting prices? Well, the MLS HPI benchmark price for all property types is currently $1,185,000. This is down just 1% relative to October, and it's still up about 5% relative to November last year. Looking at this by property type, we see that the benchmark price for detached homes is currently $1,982,000. This represents a decrease of just 1% relative to October, and it's up almost 7% relative to November last year. The benchmark price for attached townhomes and duplexes is currently $1,092,000. This is down 0.7% relative to October, and it's up about 7% relative to November last year. For condo apartments, we see a similar trend. The HPI benchmark price is currently $763,000. This is down 1% relative to October, and it's up about 6% relative to November last year. After 10 interest rate increases by the Bank of Canada over the last 2 years and the steep inclines we saw this year, it's evident that activity has finally started slowing down in the market. But I think the big question for us to ask is, why has the market been so resilient, and why are prices still up higher than they were this time last year when interest rates were significantly lower? And there are three big trends at play here. Number one, our immigration. This year in BC, we've allowed 160,000 new people to move to the province, mostly due from immigration. And this is at a time when analysts say that we're still lagging behind the housing starts we need to keep up with this population growth. And when it comes to the interest rate increases, while many of us are certainly feeling the pain of these higher borrowing costs, There's a significant number of homeowners in BC, in fact it's 50% in Vancouver, that don't have any mortgage on their property. And it's this combination of increased demand due mostly to immigration and lagging supply that's still putting pressure up on prices. Looking ahead to 2024, many analysts seem to agree that the Bank of Canada will likely start reducing their interest rate within the next 6 to 9 months. And while they've kept their interest rate flat in the month of December, what we've seen is that fixed rates have started coming down at many banks in response to the bond market. And if things play out the way they're predicting, it's very likely we're going to see activity starting to increase in the real estate market in the spring and summer markets, and very likely that we'll start seeing prices edging up again. And one trend I'm noticing is that what we're seeing play out in the market right now, especially how buyers and sellers are behaving, is mirroring almost exactly what we were seeing in the market this time last year. And if we look at this time last year, we see that the best buying opportunities for buyers were in November, December, and January. And those who waited missed that opportunity. And looking ahead to 2024, I really believe that what we're seeing right now might be the best buying conditions that buyers can hope for if they don't want to compete for inventory and they still want to be able to negotiate on prices. So if I was a buyer looking to get into the market or work my way up the market, I'd start looking for opportunities right now and really be strategic about trying to get ahead of the market. So if you're thinking of making a move and would like to schedule a consultation, you can get in touch with me by clicking the link down below in the description here on YouTube or clicking the link in my bio on Instagram. And to stay up to date with what's happening in the market, be sure to subscribe here on YouTube and follow me on Instagram at adina.yvr. That's it for now. Have a great rest of the month. Happy holidays, and I can't wait to see you in 2024.